Hey everyone, this is June from Turning Point Life Investment, and I have here Chris with me.
Hi, everybody.
All right, this is your market analysis for July 12th, 2011. Let's go straight into the analysis. Chris, why don't you lead us off today?
Sure, we're going to start with a 9-month daily view for the S&P 500, and I'm actually going to zoom in a bit and see what happened in today's candle. It was like a regular-sized black candle with an upper shadow. Still was a bit bearish today. We just didn't get the follow-through that was expected after yesterday's selling. And it did feel like yesterday's selling was a bit exaggerated over the top, but nevertheless it did shake out bulls and encourage bears. And today's today's black candle did show that bulls are still a bit jittery and nervous, and bears are still getting more bolder. I'm going to draw some lines right here, and I can zoom in or zoom out, and we can see it's a nice triangle that's been a nice triangle that formed, broke out of the triangle. Looks like it's coming back and testing that falling resistance line as support right now. And if you really zoom in, you can see that the daily exponential moving average is the 20. The market hit it. So we have some support levels a bit, and it's really interesting to see what's going to happen. If the EMAs get broken again and the falling resistance line gets broken, then we're going to get more selling and probably another down leg, probably lower under 1300. Now, if this level holds for maybe a couple days or so, then I wouldn't be surprised if we got a bounce coming in. We're going to go into the hourly view right here, and let me take away all these studies real quick. Going into the hourly view, we can really see that we drew a head and shoulders pattern. I believe we drew it on Saturday. Left shoulder, head, right shoulder, and the market broke under that level with the big black candle, which was yesterday's candle, and we were expecting it to move down, probably retest the first support, which is around 1310. And if we zoom in again, we can see that the last candle of the day was a black candle. Basically, the market was side trending the whole day and yesterday, and actually just broke down lower. So it seems like bulls were getting a bit fearful towards the last hour of the day. So that's why I'm not surprised to see actually if this market moves down and retests 310. Another reason I'm still leaning towards the bearish side is because if we went back here, we can see this market broke down under the hourly exponential moving averages, came back up and retested the 20 as resistance, and then it sold off. So now we have that same type of pattern where the market moves down, moves up, retests the 20. And if it's another down leg, then this 20 is going to hold as resistance, and it's going to continue lower. For confirmation of that, I would want to see a break under 1310 right now. June, any comments?
I feel the same way. I think the market has a high probability of moving lower tomorrow. High probability, not guaranteed, but the reason why I say that is because there hasn't been any divergence yet. If you look at the hourly MACD, usually when you see a consecutive down move towards the last couple of legs, you would start seeing divergence, meaning that the legs are getting weaker and weaker and the selling pressure is getting weaker. That means momentum is getting slower. But right now you can see the current momentum to the downside is still pretty strong, especially with the last two moves. And I suspect that with this next leg lower, it will probably be the weaker leg, meaning that it's starting to slow down the selling pressure. And we are out of oversold if you look at the hourly stochastic, just by moving sideways, and that's one way. I mentioned before, there's two ways for this market to get out of oversold, either by pulling back or going sideways. Now, we didn't exactly get the rebound that I was thinking about today, or that I imagined, and I think a lot of people were expecting some kind of rebound today, and I was one of them. And then that's the thing about expectations. It's when everyone expects the same thing to happen, and this has happened many times, it usually doesn't follow through or go according to plan. And so that's something to keep in mind, especially when you read our blogs, read other people's blogs, other newsletters. What's the general consensus? If everyone says, oh, we're expecting a rebound tomorrow, then you know what, that might be too good to be true. Okay, so keep that in mind anytime you do your own research, do your own analysis. You always have to take into consideration what other people are saying, and does that align with what you are saying and what you are thinking. But other than that, just be a little more cautious. There hasn't been signs that the market is stabilizing yet. With that said, are there any stocks that you have in mind or that you have on your watch list, Chris?
Yeah, I have a few stocks. Let's go into SLW. Starting off with the daily view again. We can see that SLW had some support back here, it broke under support, retested it as resistance, which is around the $37.50 level. So SLW looks like it wants to continue up and break above that level. Looks like it's forming a nice higher low right here. So we'll see if it breaks above 37.5. I wouldn't be surprised for it to retest these highs it made back here around $42.50. So even though Stochastics is getting a little bit overbought, we can see that this actually went down and moved sideways a bit. So it looks like a poise for a nice breakout above 37.5. We'll take a look at SLV in a little bit, and SLV continues up. I wouldn't be surprised SLW continues above that breakout level. Next stock I want to take a look at is USL. We've been taking a look at it from the bearish side, and actually today it looked like it formed a nice bullish engulf pattern holding above 37. So I would actually be taking a stab at this from the long side. See, first resistance is at 39. So that would be like your quick first target, but I'm expecting this to break above 39 and actually retest these highs around here, which is around $40.70 or so. So we'll keep this on our bullish watch list. Next stock I'm taking a look at is BDX. It performed great for us in a couple webinars that we've mentioned about going long in this stock. The breakout level was above 87. Now it seems it's moving back down to retest that level and the 20-day exponential moving average as support. So, I wouldn't mind if this thing holds and then bounces up higher, taking a stab at it from the long side. If this thing gets under 87, this line that I drew right here, then I probably wouldn't be looking at it for a long. Last long I'm taking a look at is AZO, AutoZone. Last time I tried to break above 300, it failed. Actually formed a nice bearish engulf pattern and just moved down from there. Now it looks like it wants to retest 300 again as a nice even resistance level, and most likely this time it's going to break above 300. So even if the markets go down or form a down leg, I'm still expecting this to probably be an outperformer to the upside.
All right, let me switch to my screen so I can see show you guys what I'm looking at here. Let's go ahead and do that. All right, so what I'm looking at is SLV. Now, Chris mentioned SLW. Now, what I like about SLV is, let me take away the studies here. We presented to you guys that that silver was in some kind of a box range, but here's another way of looking at it is, what if this is a triangle? And it actually fits nicely in a triangle, especially today where recently, last week, it broke outside of this triangle, and you get your classic retest of that support level of that broken, or I should say, of that broken resistance, now getting tested as support. So if we're basing SLV on this analysis here, then a continuation of either tomorrow or above 36 would be a good buy for the stock, and a stop under 34, aiming for the high here around 38, maybe even 40. If we get above 38, 40, the reason why I chose 40 is because it's a nice even round number, and stocks usually tend to get attracted to those or stall underneath that, just like AZO stalling under 300. So that's something that I will look for as far as like a second longer term target. So keep an eye on this. The reason why I like it also is because volume is kind of starting to pick up. So maybe there's some accumulation going on that we don't know about, or at least we don't know directly, but we can see it indirectly through the pickup in volume. Next one here is PRGO. Before I go on into showing you a couple of more stocks, the thing I want to say is, even though that, yeah, we are showing you stocks in our videos, it doesn't mean that you should go out and buy them tomorrow. All right, that's not what these stocks are for. These stocks are stocks that we are watching and keeping an eye on them and waiting for the right opportunity to enter. Okay, so even though, yeah, the setup looks great, the stock looks great, but if the market condition isn't exactly good to enter or buy, then you shouldn't buy. Okay, so always wait for that right opportunity, and all we're doing is providing you with stocks that has the potential to move given the right market opportunity. So again, PRGO, you see this cup here, still in the process of forming a handle. Volume picked up a bit today, which isn't too bad. So I'll keep an eye on this one as a potential play. And POT, I think also POT, this will be the last one I'll mention. Our members mention it. I keep mentioning it, and I think this is still a pretty good stock to be in, but it can probably rest a little bit more, and I think that 57 is that critical support level. It came back to retest it again today. So if it's broken, there's a good chance it might come back to this gap area around 56, 55. And if you don't want to hold through it, okay, if you don't want to hold through that drop, then you should definitely get out at a break of 57 and reconsider of getting back in when it's down around 55 or 56, so you can get in at a lower price. So that's what I'm really looking at. Okay, overall, like I said, the market hasn't shown signs that it's ready to bounce or rally back up yet. So stay cautious out there. We had a great 2-week rally, and right now the market needs to rest. And the best we can do is just kind of be patient. Anything else you want to add, Chris?
Well, Jun, you actually hit it right on the dot about just being conservative right now. I'm not saying to be super conservative, where you do like 1/3 of your positions, but about 50% conservative right now.
Yep. Okay, sounds great. We'll go ahead and post this up, and we'll talk to you guys next Thursday.